myself Dr. Riya Singh. I am Assistant Professor of Kristo Jayanti College. Today we are going to discuss about IAS 16, that is Property, Plant and Equipment. In this Property, Plant and Equipment, we are going to discuss that according to IAS 16, what is the definition? Then how could we recognize it in our balance sheet or in the financial statement, and what is the measurement of the same? Okay. So now the question is why we should know that whether any particular asset is coming under property, plant and equipment or not. Okay. We have to see this particular definition because accordingly we have to decide that whether it will go in the financial statement or not. Okay. If it is going there in the financial statement, so whether it will be treated as an asset, whether it will be treated as a liability, or whether it will be treated as a income or expense. Okay. So for that purpose, we should first know that if we are talking about property, plant and equipment, so what is the definition for the same? So if we see the definition, so that is they are tangible asset. Very first thing, if it is a property, plant and equipment according to IAS 16, it must be a tangible asset which we can see, which we can touch. Now, if that is a tangible asset, then another condition is it must be used for more than one accounting period. Okay. So if it is a tangible asset, so it doesn't mean that if we can touch it or we can see it, so that all will be our property, plant and equipment. If it is a tangible asset, now next condition is it must be used for more than one accounting period. Okay. Then with that, now another condition is it must be used for a production or a supply of goods and services. Okay. And also it could be used for rental to others or for the administrative purpose. Okay. So if we are using that particular tangible asset for more than 1 year, only for the purpose of either production or supply or for rental purpose or for administrative purpose, then only we will call it as a property, plant and equipment according to IAS 16. Okay. Now, how we will recognize it? Now we are clear with the definition of property, plant and equipment. Now we have to see that how we are going to recognize the same. So two criterias are there. If both the criterias will fulfill, then only we will recognize it as an asset. Now what is that criteria? Very first is there must be a future economic benefit of that particular asset. Okay. In future, after using it, if we are using it either for production or for supply or for rental or for administrative, whatever use, if we are using it, so for with that use we are able to just have the future economic benefit. We are able to generate the income out of the same. Okay. Then only it will be recognized as an asset. Now next criteria is the cost of that particular asset must be reliably measured. Okay. That whatever the asset we are having, we are using, the cost of the same must be reliably measured, because if the cost will not be reliably measured, then we will not be able to record it in our balance sheet. Okay. So it is very important that if we have to recognize it as an asset, so they must have a future economic benefit and there must be a cost of that particular asset reliably measured. Now next and very important is that if we are now recognized it as a property, plant and equipment, so now next will be how we are going to record it in our balance sheet. Okay. What the value will be there of the same. So the measurement of the same will be categorized into two ways. First will be your initial cost. Initial cost here, the year in which year we are purchasing this particular asset. So at that time what the cost we are bearing, that is what the cost we are recording, that is a initial cost. And second will be the subsequent cost. Okay. That after a year, what if we are using the particular asset, then what is the cost of the same, because every year the cost of the particular asset will not be same. Okay. So if first we are trying to figure out the initial cost, so in that initial cost we will have a 3 cost added. Okay. Very first is the purchase cost. very important, that if we are going to have any of the asset, if we are going to use any of the asset in our business, so in that case we have to purchase it. So what is the purchase cost of the same? Now one more important thing is there, that if that purchase cost we are having, so in purchasing that particular asset, if any trade discount we had, so we have to first deduct that trade discount for this particular purchase cost as the discount we have got, and we have to add a import duty. Okay, import duty in case of if that particular asset is a imported asset. Okay, in that case the company has to give a import duty to the government, so that cost must be added in the purchase cost. Okay, so very first will be the purchase cost. Then in that purchase cost there will be a addition of directly attributable cost. Okay, directly attributable cost here means from the time of purchase till it is ready to use. Okay, in that particular specific time, whatever the cost has incurred, that all will come under the directly attributable cost. Okay, just say example that particular asset we have purchased from one unit. Now from that unit we are bringing it to our unit. Okay, so for that there will be a conveyance charge. So that conveyance charge will be your directly attributable cost. Okay, now we need some labor to put that particular asset from that transport to our place. Okay, now for that there will be a labor charge. So that labor charge also will be a directly attributable cost. Now as that asset, if that asset is very big, that need a installation, so for that installation also there will be a cost. Okay, so that cost also will be a directly attributable cost. Okay, so these kind of, if any cost is incurring to make that particular asset ready to use, so that all also will be added in the purchased cost in the form of directly attributable cost. Okay, apart from it, one more cost must be added. This cost will not be added for every time, but in some cases this cost will be added. What is that cost? That is present value of dismantling cost. Okay, I just want to give an example for the same. Just say that Jio company is there. Okay, that Jio company wants to install one network on the Kristu Jayanti College terrace. Okay, now the Kristu Jayanti will ask that what is the profit for the same, what the benefit is there for me. So Jio will tell that for 5 years we are going to install this particular network in the terrace of your college. Now for every month I am going to give 1 lakh rupees to you. Okay, as a rent. And after 5 years, when we are fulfilling our agreement, at that time, as we are going to take out that network, so some damage will be there on your particular terrace. So for that damage, I am going to give you a cost. So that damage cost here will be your dismantling cost. Okay, when they are dismantle that particular network, so for that, if any damage has happened, for that they will give a cost to you. Okay, now if after 5 years they have decided that after 5 years when we are going to dismantle, so we are going to give you 50 lakh rupees. Okay, just say example. So that 50 lakh rupees they are going to give in 5 years, after 5 years, but that must be recorded today. So if we are going to record it today, so it must be converted into a present value. Fine. So the present value of that dismantling cost also will be added in this initial cost of that particular asset. Okay, these kind of dismantling cost used to happen when any oil mining and all, if the company is doing in the ocean and all. Okay, so they used to give a cost to the government if they are damaging anything in the ocean, under the ocean. So these all costs must be added in the very first year when we are going to record that particular asset in our balance sheet. Now there will be a subsequent measurement that from next year, what will be the cost that we are going to record. Okay, we all are knowing that if we are recording the asset every year, the asset value will not be same in the balance sheet. Okay, the very first could be your depreciation, that if no any other cost is coming, at least depreciation will come by using that particular asset. So for that there will be a decrease in the value of the asset. So for that subsequent year, what could be the expenditures? Okay, so very first is here that it enhances the economic benefit provided by the asset. So we have to capitalize it, the expenditures, we have to capitalize that expenditures if it is giving a economic benefit to the asset, very first thing. Then second is if it is related to an overhaul or measure inspection of the asset. Okay, generally we know that if any repair or overhauling is there, we used to treat it as a expense. Okay, but here if according to IAS 16, if that expense, if that repair charge is too much, okay, it is a huge amount, so in that case we cannot charge it as a expense in profit and loss account. So in that case we have to capitalize that particular amount and we have to add it in the cost of the asset. Okay, just say example that if any aircraft is there, so if any aircraft is there, that is a very big. So if any kind of repairing or overhauling is going on, they used to decide that after 5 years or after 10 years, we have to do a major inspection or major overhauling of the same. So if after 5 or 10 years, if they are doing, that cost will be very high. Okay, so in that case, they cannot charge it as an expense in the profit and loss account. They have to show it in the balance sheet as the cost of that particular asset. Okay, so this will be capitalized. Then next is, it is replacing a component of complex asset. Okay, just say example, a big plant you have. Okay, in that big plant, as we know that if the plants are very big, so it is not important that every year if we have to change the plant, so whole plant will change. Okay, if some part of that particular plant has means damage, so in that case we can replace that, only that particular part. Okay, so in that case, if any replacement we are doing in that particular existing asset, if any replacement we are doing of any part, so that replacement cost also will be capitalized. Okay, it will not be treated as a expense, as it is going to add in your asset only. So what the cost is incurring, that will be the replacement cost and that will be added to the cost of that particular asset. Okay, now if we are replacing it, so how we are going to do a calculation? So basically what will happen, that what the part we are replacing, we will see that what is the carrying amount of the same. Okay, carrying amount here means the cost, the total cost minus depreciation, that will be your carrying amount. Now we will see what is the carrying amount of the old part which we are going to replace. Okay, and now what is the cost of a new part? So from that cost of the new part, first we will deduct the carrying amount of old part. Okay, then only what the amount is coming, that will be the cost of new part, that we are going to add in our existing plant or the machinery or any of the asset. Okay, so that amount also will be capitalized. Okay, and all other whatever the general repairs or the general expenses are coming, that all will go to the statement of profit and loss account. So with this we are ending our discussion. Thank you.